The US-China trade war continues to cast a shadow over the global economy. Tensions remain high, with no clear end in sight.
Treasury Secretary Scott Besson has called on China to de-escalate the situation. He insists that China must address unfair trade practices.
The US has imposed tariffs on billions of dollars worth of Chinese goods. China has retaliated with tariffs of its own.
This tit-for-tat exchange has disrupted global supply chains and raised prices for consumers.
The trade war began in 2018 under the Trump administration. President Trump accused China of unfair trade practices. He imposed tariffs on a wide range of Chinese goods. China responded with tariffs on US goods.
The two sides have held several rounds of negotiations, but have been unable to reach a comprehensive agreement.
The trade war has had a significant impact on the global economy. The International Monetary Fund estimates that the trade war has reduced global GDP by 0.8%.
Businesses have faced increased costs and uncertainty.
The US and China are the world's two largest economies and each other's largest trading partners. The trade war between these two economic giants has significant implications for the global economy. It is essential for both sides to find a way to resolve their differences.
The ongoing trade war between the United States and China has sent shockwaves through the global economy. One of the most significant consequences has been the reconfiguration of global supply chains.
For decades, businesses around the world have relied on China as a manufacturing powerhouse.
However, the trade war has forced companies to reassess their reliance on China. The tariffs imposed by the US and China have made it more expensive to import and export goods between the two countries.
Companies are now looking to diversify their supply chains and reduce their dependence on China.
Companies are increasingly looking to countries in Southeast Asia, such as Vietnam and Thailand, as alternative manufacturing hubs. The process of reconfiguring supply chains is complex and time-consuming.
The speed of this shift varies across different sectors. Some industries, such as apparel and footwear, have been able to shift production relatively quickly.
Other industries, such as electronics and automotive, face greater challenges in diversifying their supply chains.
The shift in global supply chains is a significant development with long-term implications for the global economy.
It is likely to lead to a more fragmented and regionalized global trading system.
This shift will also have significant implications for China. China has benefited enormously from its role as the world's factory. The loss of manufacturing jobs and investment could have a significant impact on the Chinese economy.
The trade war has undoubtedly accelerated this shift. Companies are now more cautious about over-reliance on any single country. The pace of supply chain diversification varies significantly across different sectors. Some industries are more deeply entrenched in China than others.
The apparel industry, for example, has been relatively swift in shifting production away from China.
In contrast, sectors like electronics and automotive face greater hurdles in diversifying their supply chains. These industries rely on complex manufacturing processes that require specialized skills and sophisticated infrastructure.
The lack of readily available alternatives has forced some companies to delay or scale back their plans to reduce their reliance on China.
The semiconductor industry exemplifies the challenges of decoupling from China. Semiconductors are essential components in a wide range of electronic devices.
The US has imposed export controls on semiconductor technology to China. These export controls have disrupted global semiconductor supply chains.
The speed and feasibility of supply chain shifts depend on a complex interplay of factors.
These factors include the complexity of the manufacturing process, the availability of alternative sourcing options, and the level of government support.
As the trade war continues, companies will need to carefully assess their options and develop strategies for navigating this evolving landscape.
The semiconductor industry is a prime example of the difficulties in shifting supply chains.
The U.S. actions have highlighted the difficulty of disentangling deeply integrated global industries.
The trade war has made it clear that supply chain diversification is not a simple task.
Companies must weigh the costs and benefits of shifting production.
The global economy is in a state of flux.
Businesses must adapt to survive in this new environment.
The possibility of a comprehensive trade agreement between the US and China, often referred to as a grand bargain, remains a topic of intense speculation and debate.
Such a deal would likely involve a reduction in tariffs on both sides, but it is improbable that tariffs would return to pre-trade war levels.
If the tariff differential between China and countries like Vietnam and India remains significant, it will continue to incentivize companies to shift production away from China.
However, reaching a meaningful agreement faces significant obstacles.
The path to a trade deal, if it exists, will likely be long and arduous.
The US-China trade war extends beyond tariffs and trade deficits. It encompasses a broader struggle for technological dominance.
In response, the US has implemented export controls and sanctions targeting Chinese technology companies.
The US has imposed restrictions on the sale of advanced chips and chip-making equipment to China.
These restrictions have had a significant impact on Chinese tech giants like Huawei.
Huawei was once a global leader in smartphones and telecommunications equipment. However, US sanctions have crippled its ability to produce cutting-edge products.
The US actions have had the unintended consequence of fueling China's determination to achieve technological self-sufficiency.
China has responded to US pressure by accelerating its efforts to develop its own indigenous semiconductor industry.
The Chinese government has poured billions of dollars into research and development.
China's goal is to reduce its reliance on foreign suppliers and become a global leader in semiconductor technology.
The technological competition between the US and China is likely to intensify in the coming years.
This has significant implications for global innovation, supply chains, and national security.
The outcome of this rivalry will shape the technological landscape for decades to come.
The stakes are high and both sides are determined to come out on top. The US-China trade war has placed significant strain on the Chinese economy. China, with its export-oriented growth model, has been vulnerable to US tariffs.
While China has attempted to mitigate the impact of the trade war by boosting domestic demand and seeking alternative markets, the tariffs have undoubtedly taken a toll.
Chinese businesses are facing increased costs, reduced profits, and a less predictable business environment.
This has led to a decline in business confidence and investment.
Despite these challenges, China has shown resilience in the face of US pressure.
The Chinese government has implemented a range of measures to support the economy.
These measures include fiscal stimulus, monetary easing, and regulatory reforms.
China has also sought to reduce its reliance on the US market by strengthening trade ties with other countries.
It is promoting its Belt and Road Initiative to expand its economic influence.
The long-term impact of the trade war on the Chinese economy remains uncertain.
Much will depend on the duration and intensity of the trade dispute.
The US-China trade war has injected a significant degree of uncertainty into the global economy. Businesses around the world are grappling with the consequences of disrupted supply chains, increased costs, and unpredictable trade policies.
The trade war has exposed the vulnerabilities of a highly integrated global economy.
The future of the global trading system hangs in the balance.
The outcome of the US-China trade war will have profound and lasting implications for businesses, consumers, and governments worldwide.
A protracted trade war will likely lead to a more fragmented and less efficient global economy.
Conversely, a resolution to the trade dispute would provide a much-needed boost to the global economy.
It would help to restore confidence and certainty in the global trading system.
The path forward is fraught with challenges.
A durable solution to the US-China trade war will require both sides to address the underlying issues driving the conflict.
These issues include unfair trade practices, intellectual property theft, and forced technology transfers.
It will also require a commitment to dialogue, compromise, and a rules-based trading system.
The stakes are high.
The world is watching.
The future of global trade depends on the resolution of this conflict.